GM, welcome to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we believe that crypto investing is going to change your world. That's why we're carving a path for doers to confidently build and invest in Web3. Kai, welcome. Part 2 of our investment series, special series coming at you, because now is the time. Things are happening. We already did part 1. If you haven't heard that came out on Sunday, how to 10x your wealth in the coming bull run. And now we are in part 2. Don't make these mistakes. This is all about the mistakes that people make, how they get in their own way, and how that leads them to lose money in a bull run, which is crazy. But maybe it's not crazy, because I am that guy that lost in the last bull run. Kai, why are we doing this investment series?
We're doing it for a couple of reasons. As I said in part 1, we're doing it because we just launched a course, and that course is here to help you guys not be like Jay. And instead, it's true. We all should be like Jay. Jay's the nicest guy in the world, and everyone should be more like Jay, just so everyone's aware.
Don't invest in it.
Don't invest. Yeah, just don't invest like
But
Jay.
by now that I've taken the course, you can be like Jay.
That's true. So we are here to help everyone navigate this next cycle. We believe that we are in the early days of a bull run, as we've been saying. And we think that this next bull run is going to bring tons of opportunity. And we want to make sure that you get to capitalize on that, because there's nothing worse than being in the space that goes up 150%, 300%, whatever it is on average per year, and not making any money in that, right? Like, that's terrible. And that's what most people do. And they do that because they make a lot of mistakes. And I've made those mistakes. Jay has made those mistakes. And so this episode is going to teach you these mistakes so that you don't make them. And then the reason we're doing this is because we just launched a course that not only talks about making mistakes and what not to do, but it tells you all the things you should do or you can do. And it helps build a strategy and a plan and teaches you everything you need to basically capitalize on this next cycle and 10x your wealth, if not more, through the next couple of years.
To celebrate the launch of this course, we have a 33% discount available to everybody right now. Link is in the show notes, and that discount ends today. If you're listening to this show, Tuesday is the day the show launches. This is the last chance to get the discount, so don't wait. Go sign up for the course now. As we said in part 1, this course is going to pay for itself times a lot, for sure, if you take the advice and you do the work.
I'm also going to be updating the course throughout the year as well with feedback, because we just launched it, and especially with changes that are happening to the ecosystem. And so if you take the course and you mint the NFT at the end that verifies that you've completed the course, you'll get updated content throughout the course as well throughout the year as new things arise, which is pretty mega. And then, of course, if you're a pro member, you get all that anyway, which, by the way, Jay didn't mention, 33% off for everyone. If you're a pro member, it's 50% off. If you're a founder, it's 100% off. So you might as well go become a pro member first. Then you can go get those discounts, and now you get everything all in one anyway, and now you're set.
Call that a grand salami. Knock it out of the park. Everybody's coming home. High fives all around. Beer showers, champagne showers. We're all winning. Okay, Kai, let's take it back so we all understand a little bit more about your investment history. When did you start investing in crypto, and how did that give you the knowledge that you have today of what we're talking about, of the mistakes that people make?
I would say I was lucky, but I also think that I was doing the work to put myself in the right position to get into the space in time. But I had been investing for a while, and then I was like, if I'm going to invest, I really need to I got to understand what I'm doing, because I was just kind of guessing what most people are probably going to do during this cycle. That's what I was doing, but in equities, right? I happened to make some money in marijuana stocks and whatever, because I'm in Canada and they came legal and I was early into that, but I had no idea what I was doing, right? So I was like, okay, I'm going to go all in. So 2018, 2019, I was just reading everything about investing. I was like, okay, I'm going to figure this stuff out. And I'd read a lot of economics books. And right around that time, I had met a buddy when I was in Mexico who was big into Bitcoin. And so he taught me about Bitcoin. I was like, oh, wow, I'm literally reading this book on economics. And I was like, this makes so much sense to me. Like, this is perfect. And so it was so easy for me to get. So I started buying right then and there. The reason that was so big for me is that it was early. It was before the cycle started. So I didn't come in because of hype. I came in because someone taught me about a technology that I thought was really cool. So this is way before Michael Saylor was buying all this Bitcoin and whatever. So nothing was really happening, but I was just buying it because I was like, this makes sense to me. He had got me a wallet and he sent it to me. I was like, wow, I see this as the future. And so I was interested and I was learning and buying it. And then what happened was I got to see the beginning of the cycle. So I had heard a little bit about what happened previously, and then people sort of talked about cycles, but not much at the time. Nothing was called Web3 at the time. And all of a sudden, DeFi summer happened. Well, two things happened. One, it was Michael Saylor bought $500 million and put it on the balance sheet of MicroStrategy, which had never been done by anyone. And DeFi was just going off. And so there's all these tokens and things. And I was like, whoa, what's happening here? But I was already invested. And so I got to have the kind of that first look into it all. And so I did what everyone else did. And I just started buying a bunch of random things. Luckily, I didn't put a bunch into it. And some of them went nuts and like 10x within like a day. And I was like, whoa. And then some of them just like plummeted, went to zero because they got rugged. And I was like, what the hell? That's possible. And so it was mayhem. But I quickly was like, okay, this is cool. I want to see what's going on. So I started studying the actual like projects. And I was like, what is tokenomics? It wasn't really a thing back then either. But I really started trying to understand how these tokens worked, what the business models were, et cetera, et cetera. And so I really caught wind of what was happening. And so I pulled a lot out actually of not of the entire industry, but of these like crazy shit coins that were going nuts. And I started to get more strategic in ones I was choosing. And I built a bit of a strategy on when to take profits. And so I had lost a bunch in the beginning of these like shit coins. And then I just said, I'm going to keep buying ETH and Bitcoin and let that thing ride. And I'm going to put some in these other ones, but I'm going to take profits at certain points. And that really mitigated a lot of risk for me. And so I got to do that just the very end of the altcoin cycle that happened. And so I didn't do extremely well for that, but decent. But then NFTs went crazy. And I saw it was the exact same thing that had happened the year prior with the DeFi cycle or DeFi summer. And so I saw immediately like, oh, this is going to be the same thing. Don't just buy a bunch of these shit coins because we don't know what works yet. You got to understand the fundamentals. And so I didn't really buy much of it. And that saved me in the NFTs, like completely saved me. And thankfully I was right on that thesis. So, I mean, it's not like you couldn't make money that you could. It's just like, you got to be lucky or you got to be literally trading and doing this stuff all day, which I was busy building businesses. So that wasn't for me, which most of our listeners are doing. We're not daily traders that sit there. And so the background I had previously coming into crypto and then sort of like going all in just before the cycle, that really, really helped me kind of navigate this cycle.
Let's be clear here that your advice and what you talk about in this course and what we talked about in part one of this series is not that setting people up to become traders and to make quick gains.
No. There's not one time in this course do I say you're going to get 1,000x, and we don't do any marketing from that because I don't think you're going to. I'm not going to lie. I think that is extremely, extremely hard to do and pure luck.
Right. So
the weird thing is when you first come in, you think that that's what you're going to get. Mm-hmm. And the chances of that are just, it's not going to happen.
Right. So what this course teaches you and what we teach is more about the long-term gains and how to build wealth over time, not just jump in and be a trader. Because I think some people think that the only way to make wealth is to be a trader. The only way to do great in crypto is to get the next hype cycle and be involved in that. That's what I thought. That's why I jumped into NFTs.
Right. And absolutely it's not. I mean, look, you can make money that way, but fundamental investing or long-term investing is, especially in a asset class that is growing so exponentially and has these cycles, long-term investing is an incredible way to increase your wealth. And you can make unbelievable money that's just not, people don't like to dollar cost average or like long-term invest in equities because they go up like 10% a year. I get that. That's kind of boring, right? That's why I don't like real estate all that much, except you got to live in them. But crypto, you do this stuff and it goes up 200% a year, right? And so it's like, okay, that's cool. So you don't have to trade, but you just do it with a certain part of your portfolio.
Right. Okay. So you've been through the last cycle, start to end, highs to lows. Why is that so valuable as we go into the next cycle?
I think the biggest thing about cycles is your emotions and the psychology that goes through that. I want everyone here that's listening to think about 2020 and 2021. Even if you weren't in crypto, it was a year of just like craziness, right? Like everyone was so emotional. Equities were going off like if you were in GameStop or AMC or even Tesla or Amazon, like these things were going nuts. And so everyone was plowing money into the stock market, into whatever they could, right? If you're in crypto, which a lot of people were then, you were plowing your money in there. And emotionally, people were caught up on this. People got addicted to social media because they thought they were going to whatever the next big thing. And it's hard to control your emotions. Now, thankfully, I practice yoga and I meditate. And so like I was able to see that and like zoom out. A lot of people are not able to do that. And so going through that cycle, you see the narratives and you see the psychological things that happen to you and to the crowd on, like, let's say Twitter, when you're on social media. And when you zoom out and you just watch it, you can start to see and understand what's happening based off of everyone's reactions. Like you see the excitement, the craziness, and then as the bull market or the bear market comes, you see the anger and everyone gets getting mad on Twitter, and then the hope when it starts to come back around. Like you could actually watch this, and it's funny because there's charts that show this, right? And this happens on every cycle. It doesn't matter if it's crypto, if it's tech, if it's, what was it back in the day in the Netherlands when they had tulips? Remember the tulip cycle?
Tulips, yeah, I had tulips.
Back in the 1700s or whatever. Like every cycle is the exact same. And there's certain emotions that people have through it, and you can watch it happen on social media. So from going through a cycle, you get to learn that. And then when you start to feel that, you recognize it, it makes all the difference, because the amount of times where you hear something and you just immediately go and buy, right? Now I don't do that. I take a breath, I stop, I think about it, I write it down, and then I come back the next day and I usually go, actually, that would have been dumb. It's a good thing I didn't buy that, right? So you just learn how to handle your own emotions and then see what other people's emotions are. I think it's the biggest thing in these cycles. I was gonna say that's what all the mistakes are made.
Right. Okay. So we want to make sure everyone avoids making these mistakes, and we're going to talk about what those mistakes are and how to avoid them in a second here. But first, what is a cycle? Let's just explain that, make sure everyone understands what a cycle is, what it looks like.
Tough answer here. So a cycle, it depends on how you want to look at it. These crypto cycles are basically every 4 years or so, the industry has a big boom, right? And it basically revalues itself. And so it goes from, ETH was at 150 back in 2020 and went up to 5,000 in 2021. And these cycles come from when liquidity conditions clear up, the technology gets better, people get interested in the space again, they want to bring in capital, people bring capital in. But what happens is as capital comes in to sort of revalue and go, oh, this technology is way better, it's now actually worth more. Instead of them just revaluing it to its actual real value, what happens is, because of psychology, a bunch of people FOMO in and follow along. So some people come in and put the right amount of money to make crypto what it's supposed to be valued at, or Tesla what it's supposed to be valued at. But then a bunch of other people go, oh, I want to make money on that too, because that person just made money. And it's like a ripple effect, and it happens all across the world, especially in crypto because it's a global currency, right? And anyone can invest in it. And so what happens is this ripple effect takes time. It goes in cycles. Well, not cycles, but it goes in ripples to people. And so that's what creates these like really weird cycles where things go crazy for 2 years and then they die out for 2 years. If you zoom out, you see it just kind of on a trend line going up, like a linear line, but it doesn't happen because we have these cycles of people getting too hyped and it gets overvalued, and then they get too bummed on the space and it gets undervalued, and then it keeps happening. And this is how crypto has worked for the last 12 years. And honest, most tech kind of goes this way, at least like high growth tech. They all kind of function in this way. Not perfectly, but tech usually does this because with new technology, you can think about what it's going to do, right? We talk about it on the show all the time, but it generally takes years for that to actually happen. So when we think, oh my God, Ethereum's going to take over the world, everything's going to be on it, it will, but probably in like 10 years from now. But we start investing like it's today. And so that's why things get overhyped and we go, wait a minute, it's not taking over the world, right? This thing just ran up 50x. We're like, wait, it didn't take over the world. Nothing's on it yet. There's only a couple people. It's slow. It's clunky. And you're like, shit, it's not that good. And then they sell out and then it goes undervalued. Then everyone's like, well, wait a minute. It's definitely worth more than that because a few companies did come on. And so it goes again. And it's like these cycles just keep happening. That's exactly what this is. There's the liquidity part to it that I always talk about, like the macro component. But there's also just the psychological component that makes these cycles and makes them fairly predictable.
So let's talk about the last cycle. What happened during the last cycle? As you reflect back, having experienced that, what did you learn? What did you see that you really want to make sure people understand going into this cycle?
In terms of mistakes, or are we not on mistakes yet?
First, before we talk about mistakes, more so give us an idea of like an overview of what the cycle was like, and then let's go into mistakes.
I mean, so last cycle it really got kicked off by two things. One was an innovation of DeFi. DeFi didn't really exist like we know today. And so there was like Uniswap, but then all of a sudden there was Aave and a bunch of other like, Sushi Swap and all these things where you could exchange tokens and lend out tokens. And so it was like a new innovation, something that didn't exist on blockchain previously. And so a bunch of people got hyped up about it. And so that was one of the things that kicked things off. And then also it was Michael Saylor putting in a bunch of money and kind of legitimizing the space. And so that took things a little bit crazy back in middle 2022. And then all of a sudden in 2021, you had like Tesla put Bitcoin on their balance sheet. You had CryptoPunks starting to go on this crazy run and people starting to use NFTs. So again, a new innovation. And then mid 2021, you had gaming where all of a sudden there was Axie Infinity and a bunch of these things where, again, that had never been really a thing on blockchain before. And so you had a bunch of these like hype cycles within that cycle that really accelerated adoption. And the more people that come into the space, of course, there's more people buying these tokens. And so the prices go up like crazy. So that the whole cycle was because of innovations. It was DeFi, NFTs, and gaming. The cycle before that was ICO boom, the ability to create tokens. Tokens are normal for us now for in the space. That didn't exist previous to 2016. All of a sudden that happened and people were like, whoa, I can raise money around the world from a click of a button. And boom, everyone started launching tokens that brought a bunch of people in. What happens is when people come in to participate in these new cool inventions, they have to buy ETH to pay for gas and to buy the things. So ETH goes up like crazy. And then a bunch of these tokens people speculate on. Same with DeFi, NFTs, and in gaming, you had to buy ETH to get into it all. ETH went nuts in early 2021. And so same sort of thing, same idea. So that was really it. And then of course it gets blown out. There's too much capital in there and the conditions change and people start taking their money out and it just blows up like it did. I mean, really blew up this year. We were 2022. We wasn't expecting that, but it actually blew up in this instance.
Okay, let's talk about mistakes then. So you went through that last cycle. I mean, it's amazing when you describe it, it feels like well, everyone must have made money, right? But that's not the case. A lot of people lose. Even in a bull run, a lot of people lose. Why is that?
The main reason is greed. And I know people are like, well, I'm not greedy. I'm not going to do that. And it's like, just wait. You will. We all do. That's just how humans are. We always want more. And so there's many things many mistakes people make, but usually it comes down to greed or not having the right knowledge. And I'll talk about what I mean by knowledge in a second. By knowledge, I mean like security and making sure you're protecting your assets, et cetera. Let's talk about the greed for a second, because I think that's the main thing that I learned from the last cycle and the main problem that I saw with people on Twitter, that I saw from friends and really everyone. Greed is this like emotional thing that we go through where we just want more. And it's hard, like you have FOMO, right? You see others that are making more than you and you're just like, screw it, I'm going to do it. And greed forces you to do things that you normally would not do, whether that's using more money than you would want, right? I mean, hopefully no one here is leveraging their home or leveraging whatever to like get more capital, but you often put in more than you actually can handle as a result. And it happens because maybe you come into the space and you buy some Bitcoin because your friend told you to, which is great. And Bitcoin goes up 20% over the next 6 months. You're like, sick. But then you're on CoinMarketCap and you're looking, or you're on Twitter and you're seeing like, well, this thing went up 1,000% in the last like 2 weeks. I only went up 20% last 6 months. 20% is really good in 6 months, right? Like that's really freaking good. Warren Buffett gets 15% a year on average. You just got 20% in 6 months and you're like probably 24 years old in your mom's basement. You know what I mean? Like give yourself a pat on the back, but you see that thing go up 1,000, you're like, shit, well, I'm going to take some of this and put it there, right? And then all of a sudden you see another one that's going up even more. And so you put some over there and you see another one. And because there's so many of them and there's nothing stopping you from investing in any of them, you start jumping around, right? And that's where you get all caught up. You don't know those things you're investing in. There's no way you're keeping an eye on 30 different projects and understand who the team is and if it's real, if it's not real, like you have no idea. So you get all scrambled. And again, you no longer have a plan, right? And you're investing in things that you don't know if they're going to make it or not, right? A lot of these tokens that people are investing in 2021 went to zero in this bear market or went down 99%. That's and I've never not come back up since. That's a big difference from ETH going down 70% and already being back up another 60, 70% since, right? It's a very big difference. Like it's massive how much it is. If you go down 99% and you have $1,000 in, you have $1 left. If you go down just 70%, you still have $300, right? So those numbers are a big, big, big difference. So people go down too far the risk curve investing in things that they don't know. That's one of them. The next thing is people start to learn about DeFi. It's very easy to go and stake your tokens because that's usually incentives that these projects will use as a marketing tool to get you to come and put your tokens and lock them up here, and we'll give you more tokens. And everyone's like, sick, I already got these tokens. I want to hold on to it. I'll go make more. Well, they don't realize that that's inflating that token. And now that token's actually going to be worth less over time, or you're about to get rugged, which happened, still happens all the time. And so you have this asset that, let's say Ether Bitcoin that you know is going to go up, as I said, 150% on average every single year. And now you're going to go and risk that on making an extra, 7% in some DeFi protocol that just launched yesterday. And it's in a bunch of Anons who are the founders, right? And so to try to get 7% per year when you're already going to make 150, is that really worth it? But we don't think about that at the time, right? Mm-hmm. You get $1,000 and you go 150%, okay, in the nenext year. That's, what is that? $2,500 you make. If you add the 7%, that's like $2,564. Cool, good for you. You know what I mean? Like, it's really not that much when you think about it, but we don't often do that because we're just like more, right? Mm-hmm. The other thing that's also really easy in crypto is leverage. It's really easy to take out a loan based up. You're like, I have ETH. If I give that ETH to that thing, it stays there. I don't touch it. And they're going to give me some US dollars for that thing, and I can go put it in more ETH, right? And as long as it doesn't go down by like 50%, I'm all good. Well, how did that work out for everyone that did that at the top in 2021? Really bad. So you didn't just lose 70%. It actually just took your collateral. You actually went to zero. It took it all, right? That's the problem going leverage. And so many people do it who don't even know what leverage is, but you just do it because you want more. So those are some of the mistakes you make in terms of just like your investing strategy, which can be problematic. To go back to the emotional side of things, right now, you probably think you would never do that. It's really easy to stick to your plan right now. You can dollar cost average, not worry, not check the prices, because prices aren't moving right now. When prices start going up 10% every day and your net worth is going up and up and up, and you're starting to feel like a badass, you want to start making moves fast. That's the time. And so this is the time when most people take leverage at the very top of the cycle, which is the most riskiest time to take leverage, the most riskiest time to buy these risky tokens, right? Most riskiest time to put more money in. But that's what we do because we think there's more and more that's going to be made. And again, it's hard to understand if you haven't been through it. Once you've been through it, you're like even now, even thinking back, I'm like, holy shit, what was I doing back then? Like, it's crazy. It's wild. And so the same thing happens on the other end of it when you're in a bear market. You've been now everything, you're scared. You're like, this industry's not going to make it. Even though a year ago you believed in it so much that you could put your whole net worth in, and a year later, because prices have gone down for day after day after day, you're like, I'm out. I'm selling it all. I'm never touching this thing again, right? I'm never going to leverage. I'm never going to do anything. And again, that's just emotions. That's just your emotions going up and down. The biggest mistakes are, one, don't leverage. Don't have that greed, okay? Figure out your emotions. Don't get caught up in these cycles, which Jay's famous quote, don't get caught in the hype cycles, right? That's what's happening here is people are getting caught in the hype cycles. The next thing is this, and I hope everyone's learned this lesson, but we'll have to learn it again because it happens every cycle. Don't put your shit on centralized exchanges. Every single cycle, because look, I'm talking about all of us who mainly people listening to this are retail, right? We get caught up and we leverage and things like that. So do the professionals. And so what happened in 2021 is everyone gave their money to BlockFi and to Celsius and to FTX and all these companies to make, a couple percent for them because they're professionals. And so they custody their assets and they go do their thing. Well, they have FOMO just like we do because it's very hard to control. And they didn't stick to their plans. And so what did they do? They started leveraging at the top, giving out their money, your money to someone else, letting them leverage it. And then when the cycle ended and things went down, they blew up. They didn't have your money anymore. And so you never want to put your money on centralized exchanges or centralized yield makers or whatever it is, because they're not always going to lose it, but they're humans too. It doesn't matter if they're professionals, they're still humans. And it's really hard to manage these things. So hold your own assets is another key one, because a lot of this industry lost a lot of money by trusting centralized exchanges. And the thing is, if you're new to the space, if you just came in, let's say in 2023, you didn't learn that lesson. You've maybe heard those stories, but not really. You never felt those stories. When you feel those stories, you now know you'll never put it back on again. But new people in the space don't get that. And self-custody is a new thing. We've never had that before on the internet, right? And so it's a weird thing to custody something. Everyone's like, well, I'll just give it to them if they're going to make me 6%. But you got to understand, if you don't know where that thing's going, there's a good chance they're going to lose it for you. So Don't put on exchanges, and then protect your assets. This is the thing that most people get screwed up with is you might do it all right. You might control your emotions. You might have the perfect plan and stick to it. You might only invest in the least risky stuff or get your 1000x in the risky one. Like you might do so well in 10x, 20, 30x your wealth, but then you click one link and you lose it all, and you lose it all, right? That's the thing that pains me. And it happens to so many people, multiple people on our team it's happened to, and they had to start over from scratch. It's a painful thing. I do not want that to happen to you. And so in the course anyway, I have a whole module on how to set up your wallets properly. We've talked about it a bunch in the podcast, but custody your own assets, get them in a hardware wallet, use a different wallet to interact with apps. And that way it ensures that the stuff that you're holding on to that you're investing in long-term cannot get phished, and then protect your seed phrase, etc. As annoying as seed phrases are, and putting them in a piece of paper and in a vault, do it, because if you're going to follow the plan, you're going to make money, and don't lose that money from this. Those are the big mistakes. I don't know. Anything else?
I mean, I can just quickly share my story because I lost in the last cycle. I came in late in the last cycle, which a lot of people tend to do because that's when everybody's FOMOing in, because that's when everybody was, all the news and the articles, everything was talking about how everything was going to 1000x, 100x, all the podcasts. And I was like, I got to get in. And I came in and I bought ETH, and not a lot happened. And when I say not a lot happened, over probably a month or two, like a very short time. But time is very tricky when you get greedy, right? Because when you're greedy and you see all these stories, when everybody's talking about how much they're making, that greed creates, like, it multiplies, right? And so all these stories made me say, okay, well, I got to make some too. So I said, okay, clearly ETH and Bitcoin aren't doing what I needed to do. So I was like, I like NFTs, I like art, I like culture. Okay, I'm going to go buy a bunch of NFTs. Here's what happened. I took my ETH, I bought a bunch of NFTs, and I actually did well. My NFTs went up a lot. Not like 1000x, but I was probably up 5 to 10x at one point, right? And I got greedy. And I distinctly remember a call with Kai where Kai said to me, he was like, so you going to sell? And I was like, absolutely not. Why would I sell? This is my ticket, man. Like, this is going to keep going up. It's not going to stop. And here's the problem. And this is what you teach in the course that is so valuable is I bought these NFTs without any plan. So I didn't buy them with the plan of, okay, with this one, which I know is more risky, if it goes up this much, I'm out, right? I had no plan. So my only plan was they're going to make me rich. They're all going to go up forever. That's not true. Nothing goes up forever. So I had no plan to take out profit. So I did two things wrong that you teach well in this course. One, I put like 90% of my crypto portfolio, not my whole portfolio, my crypto portfolio, I put 90%, and my crypto is a good portion of my entire portfolio, but I put 90% into risky assets, right? So I did the opposite of what Kai says. He says, only take 10 to 20% and put it in risky. I took all of it and put it in risky. And then when I did put it in risky, I had no plan to take profits. So when there was profits available, I just sat on my hands and waited, thinking it would go up forever. And now I'm in a position where, it's all down, and I'm in a position where exactly you said, a lot of them are down 99%, and they might not come back.
Here's a test for everyone. So right now, no one is talking about the super cycle. If you're new, you've probably never heard of the super cycle, okay? Yeah, in 2021, when prices were going up, everyone was like, you know what? They're never coming down. This is the super cycle. This is when it goes, and we just go to the moon, okay? That also happened in 2017. They said super cycle, right? Didn't happen, obviously. I guarantee you, and we can come back to this clip later, TL, you're going to clip this, in late 2023, maybe early 2024, when prices are going up, we're in the hype cycle part, you're going to hear super cycle all over again. Everyone's going to talk about it because this is what happens, man. People can't change their emotions. And so even now, if you go look on YouTube, look on Twitter, look on TikTok, there's not a lot of like make 100x. There's not a lot of these like make a bunch of money, right? Because it's harder to do right now. And so there's not a lot of hype there. In 6 months from now, a year from now, it's going to be all over these, which then it's really hard to not think that you're missing out because you're not 1000xing. And so the other part, I guess I didn't explain here, is just like, be careful of social media. It's really challenging because it makes these cycles really hard. Because one, people create more hype, and then people lie. People lie so much about their gains and their profits, because in the bear market, you find out all these people were lying, and they actually like levered their mom's house and they made no money, and like they're bankrupt, and like you see it all come out. But in those moments, like, oh my God, that guy was the smartest guy. That guy's the smartest guy. Like, and it turns out they were just complete frauds. And so you got to be really, really careful. And I wouldn't trust much. What you trust is the people that are in the bear market talking about this stuff, because they're the ones that actually get it, right? But what you'll see is there's not a lot of Web3 podcasts around anymore, okay? But in a year from now, there's going to be a bunch, and there's going to be a bunch of people telling you what to invest in. Those are the people you need to be scared of. But it's the ones that are in the bear market that are actually telling you what's going on now, that are like, okay, these are the ones that have been through it and that get it, not the ones that come, the opportunists or the tourists, we call them.
So we've talked about the mistakes that people made. Obviously, as you said, it's easy now, right? We're not greedy. There's not all this hype. When we get into the next cycle, how is signing up for the course now? Let's say somebody signs up for the course now. They take your advice. They start to allocate their assets. They make them secure. They do all the steps. But then we get into the next cycle and things change. How is signing up for the course going to help them get through the coming cycle?
Well, so first of all, the course is just going to be the foundations. You can come back and look at it throughout the cycle, which I'd recommend you do, because learning something now, it's going to be hard to remember it all in 2 years from now, or a year and a half from now, right? So like, come back to it if you want. The other thing is find the right communities to be a part of, and just like continue to speak with them, discuss with them, and navigate the cycle with these people, which if you take our course, you're going to be able to do. You can go on our Discord. There's a private channel for those who've taken the course. If you're a pro member, you get a bunch of private channels and you get ongoing research. And so these are things that will help you kind of stay level-headed and be able to ask, like, hey, I want to buy this thing. Like, do you think this is a good idea? If you heard of it, is this a hype cycle kind of thing? Like that last cycle, that's what I did, is I had some that I followed and some like really big communities. Luckily, we had clients that were in the space, so I could actually have one-on-one conversations with them. And that was extremely helpful to me to like stay with people who are experienced. If you follow, like I'm saying, if you follow those opportunists, the tourists, the ones that just got here, they're also in that hype cycle. And so you're listening to someone that is not even, they don't even know what they're thinking themselves. Whereas people who have already been through the cycles, the OGs, they're more level-headed because they get it. They've been here and they've seen it. And so, I mean, take the course and then go study more. Like, don't stop there. Take this course. It's $160 or whatever with this discount, and like, which is nothing. And then go find more if you can. Get into the Discord. Get into others, not just Web3 Academy. Find your few sources of truth and then stick to those, and just be careful about the next sources that come out later on, because that's where they're going to start to skew you and send you in crazy directions. And again, it's not like I'm saying I'm going to be right about everything or Web3 Academy is going to be right about everything. Absolutely, we're not. But we're going to take a level-headed approach at least, which is going to really, really, really help your chances. And same with others out there. We're not the only ones. Anyone else that's in this space now, they're probably more level-headed.
I love it. Kai, you bring your meditation and your yoga mindset, and you remind us all to take a deep breath and to stick to the plan of building wealth over time, not trying to 1000x all at once. Take the mic for a final time. Any advice? What should people do right now? You know, we're in August of 2023. We believe there's this big opportunity. How do people capitalize?
Take the course. I hate to be the person that says that. It's like whenever we ask people to say something on the billboard, right? What's one thing you would put on the billboard and they say their company name? Like, I hate that. But look, if I was to give advice, that's the thing that I did to give advice, right? I just spent hours and hours and hours building something to advise you what to do. And so to answer that question, instead of answering it in 10 seconds, which don't ever take advice from 10 seconds, i.e. don't ever take advice from a TikTok video. Instead, find something where there's a lot of, like, I'm trying to teach you the fundamentals and like how to think, rather than exactly what to do. And so that's what this course is doing for you. And so I don't want to give investment advice in 10 seconds because it's not going to work, right? But this course, it will. That's why I built it. So that's my advice, is to go there and get it all the advice.
There you go. Links in the show notes. 33% off, ends today. So make sure you grab it today. If you go pro, you get 50% off. So you might want to go pro first and then get 50% off. Or you might want to get a founder's pass, then you get 100% off. So much opportunity. And as Kai said, we'll be with you all the way through this next cycle. We're not going anywhere. You know we're not going anywhere because we're still here through the bear market. And Kai's going to continue to update the course. We're going to have the Discord community. We're going to have lots of conversation going on. So it's not just a one-time thing. There's going to be ongoing support, ongoing knowledge, and more coming at you because we want you to capitalize. We want you to gain because there's a big opportunity right now. So don't miss out. Sign up today.
I had to do last cycle on my own. I'm excited to do this cycle with you, Jay, and everyone else listening and everyone in the Discord. This is going to be a lot more fun.
Let's go. Thanks so much for listening, everybody. Have a great day.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.